Hello, welcome back to Sabi Market channel. It's nice to have you here again. It's always a delight, like I would like to mention, to have you here as our viewer. Thank you to all of our subscribers, both new and existing viewers. We really appreciate you. Okay, before I dive into today's business, please, if you are yet to subscribe to the channel, please kindly hit the subscribe button. It costs you nothing. So nothing is actually deducted from your account or whatever. It's actually free to subscribe, and also hit the notification bell so that when any video is uploaded, you'd be the first to get notified. All right, so moving into today's business. So we'll be looking at Lafarge Africa Plc's ROA. So this is supposed to be ROA and not ROI. All right, so it's been more like a series on Lafarge Africa Plc, because in a number of my previous videos have been on Lafarge Africa Plc. I've treated their net profit analysis, I've treated revenue trend analysis, I've treated their net profit margin, I've treated their cash flow analysis, and here is a return on assets. So it's more like an overview of a lot of their financial metrics for period. So some is period of 10 years and others for a period of, this is supposed to be 2023. Okay, that was an oversight. Okay, all right, so some are for a period of 1 year. For instance, a cash flow analysis is for 1 year, just 2023. And then after this video, I'm also going to do an analysis of their debt to equity ratio, and that would also be 2023, so for a period of 1 year. So that's just a brief overview. So today we'll be looking at Lafarge Africa Plc's return on assets. So return on assets is actually saying how much profit do they get from the asset that they have, from the investment they've made in assets. So for those of us who this is the first video they are watching on Lafarge Africa Plc that have made, I know you'll be expecting, if you've been a returning viewer, you'll be expecting that I do an overview here. I decided not to do an overview because I made an overview for Lafarge Africa Plc in my video on net profit analysis, on their net profit analysis, so you can just look that up. Lafarge Africa's net profit analysis, I gave an overview of the organization right there, so you can just look it up and get an overview there. Thank you. So moving quick, so return on assets is a financial metric that measures the company's ability to generate profit from its assets. So the higher the value, the greater the ability, the more competence it reflects competence, reflects capabilities of generating profit from their assets. So it indicates actually how efficiently a company is using its assets to generate earnings. So, and basically it's a function of the net income and the total assets. So dividing the net income by the total assets, we get our return on assets. So it's really not going to be a long video, as I've decided to save our users time. So like I mentioned before, a high return on assets indicates a company is generating strong profit from its assets. So we're going to run through the numbers here that you see on your screen, but then I just like to give a clear insight on what the values are saying, so that we can just have a seamless walk through the value. I can walk you through seamlessly through the values. Yeah. So on the other hand, just like you already guessed, a low return on assets indicates a company is not using its assets efficiently enough to generate profit. And this metric actually comes with certain advantages and limitations. And one of those advantages is that this metric helps to evaluate asset utilization. So it can help investors and managers assess how effectively a company is using its assets, and by implication also inform their decisions as to whether to make adjustments or to improve on whatever it is that they are they've been doing. Maybe they have to replicate strategies, or they have to change strategies, or they have to maintain strategies and all of that. Then comparability also, that's another advantage of this metric. So it helps in comparison across different companies or industries. So you can compare your company with another, you can compare another company with yours, and even compare industries based on this value and see which one is higher, which one is better. And then you can give room and inform your interest in improving your performance. Also, simplicity is another advantage, and that just says that it's a straightforward metric to calculate. Yes, it's not a complex metric. So the way to just calculate is just take your net profit data, and for the period of time, for the particular period of time you're interested in. For instance, this video is costing across 2014 to 2013, period of 10 years. So just obtain the net profits data for that period and the corresponding total assets for that period, and then just divide the net income by the total assets, and then you have your return on assets. You might want to multiply it by 100 because it's going to give you a percentage, so you multiply it by 100 and then you get your actual percentage for that. So having done the advantages, let's just shift a bit to the limitations. So one of the limitations of this metric is that it ignores liabilities. So it only considers the assets and ignores liabilities and their impact on profitability. So it does not take into account liabilities, it just focuses on the assets, and that can be a drawback. And also, it does not account for risk. It does not consider any level of risk associated with a company's assets. That can be a downside. And it can also be influenced by accounting principles. So it can be affected by accounting decisions such as depreciation methods. So for instance, you have a particular asset, and that asset is depreciating over the years, maybe for instance a car. So it also does not, it can be affected, this metric can be affected by such occurrences and such situations. So let's just dive into the numbers, and so for best practices, right? This is something to take note of. So it is very much advisable to not use this, or should I say it's not advisable to use this metric as a standalone metric to judge a particular company. So you might want to consider using this metric, which is return on assets, alongside other metrics such as return on equity or return on sales to evaluate a company. And also analyze trend, which is one thing we are doing right now. So we are not just staying with just 1 year, because you can see here in 2018 and 2017, just imagine we want to judge the company by those 2 years. That might be bringing us to a wrong conclusion, when that is just could call it probably a one-off experience for that company. And then if we want to judge the company's performance based on that, may lead us to a wrong conclusion. So it is very much advisable to examine the trends. So analyze the trends by examining the changes in return on asset over time to assess a company's progress in asset utilization. So what we are doing right now, this video is just best practice. We have to analyze it over time and not just pick one year. You have to analyze the trend and not just take one absolute standalone value for particular year and make a conclusion. So it may lead us to a wrong conclusion. And lastly, we have to compare. Another best practice is that you can compare industry averages. We can benchmark a company's ROA against industry average to evaluate its relative performance. Okay, so we can then dive into the numbers. So for now, we can see here that in 2014 they had 19% return on assets, which is not bad. Yes, which is not bad. I guess the industry average is 20. And so for 2014, what they had was 19%. So this means that all the money they invested in their assets for that particular year, which is 2014, they had a return, they had a profit of 19%. So 19% of the money. So for instance, they invested 500 million in assets. So at the end of the year, what they got in return as profit from that investment was 19% of that 500 million naira. So that is. So I would like to confirm the industry average of this industry, so that we know if they have actually performed well or they have performed terribly, or let's say bad, to be explicit enough. So I'll just look that up. I'll just look that up now. Okay. Just a minute, please. Be with you soon. Okay, so while that comes up, so let's just walk through the numbers so then we can just review again. So also, in 2014 we saw 19%, and then I think that's the highest and the best experience they had in the period of 10 years that we are going to be analyzing. So for wow, okay, so I'm just saying now that for building materials, which is the industry that Lafarge is operating in, their industry average is 9.9%, and that is showing here that they did incredibly well. So they have actually even beat industry average in most of the times here. Is it most of the time? Oh no, I think 50% of the time they were above industry average. Yeah. So here we see in 2014 19%. So industry average is 9.9%. Let's say approximately 10%, right? So 2014 they had 19%, which is above the industry average, indicating that they efficiently utilized their asset for that year. And 2015 even though the percentage appeared lower, it still reflected that they made profit and they efficiently utilized their assets, right, in generating earnings and profits with that one. Then in 2016, they went 2.9% below industry average, and there was a staggering decline. Afterwards, in 2017, they went below the line at minus 7%. It means that they ran at a loss for the investment they made that year, and it means they couldn't efficiently utilize their assets, and that didn't generate any profit. And it became worse in 2018, where they experienced a negative metric of 22% when it comes to generating profit from assets. So there was a loss that particular year, but then fortunately they went above the line. That's with about, so if not for they went, well, I don't want to complicate issues, but then for moving from 22% negative to 6% positive is a very big jump, and that indicates I believe that strategies has been adopted, and obviously the strategies actually paid off to have taking them on a high jump from negative 22 to 6% must have actually been a remarkable strategy that they've adopted, because it actually paid them off. And then it went up a bit, even though they were still below industry average. It went up a bit to 8% in 2020, and I think either they refined the strategy or then they maintained it, and it took them up to 14% in 2021, which is way be above industry average. And then in 2022 there was a decline of 4%, although they were still within the range of the industry average. And then in 2013 they went further up to 13%. So we could see here, so far my analysis of Lafarge Africa Plc has been, I have a positive view of them. I don't know what you think. If you have been following the videos, I actually don't know what you think, but then for me, I have a positive view, because even though there are some times where they experience some negative records, that's bound to happen in the company, and that's actually, as long as you do not stay there, as long as you re-strategize as an organization, as a manager, as an investor, and you come out of that place, adopt strategies that changes the story and the experience, and that's all that matters. As long as you don't stay down, you come up, you struggle up. It also applies in our personal lives, that we don't stay down, and it's just the same for these companies. They don't stay down, and then they keep adopting new strategies to just navigate through the storms. And I think Lafarge has been playing that game well, and I really commend them. So that brings us to the end of this video. Thank you so much for watching to the end, and please don't forget to like and subscribe to the channel. And if there's anything you think, kindly drop it in the comment section. I'll be happy to reply. And then see you again in my next video. Bye bye.